We've now covered a power stock and an oil stock from Peter Thiel's rebuilt $419 million portfolio. Today's name is the smallest position in the whole fund, but arguably the most speculative and interesting one.
That's X-Energy, ticker XC, at just 0.9% of the portfolio, about $3.7 million. Compare that to Amazon at 28% or Vista Energy at 18%. This is a tiny venture-style call option sitting inside an otherwise very conservative utility-heavy book.
Welcome back to OrderFlow, the show that breaks down the signals that actually move markets. Insider buying, institutional flow, and the milestones that separate story stocks from real businesses. I'm Matt.
And I'm Ryan. Standard disclaimer. This content is for informational and entertainment purposes only, not financial advice. The host may hold positions in the securities discussed now or in the future. Always do your own research and consult a licensed financial advisor before making investment decisions.
So what actually is X-Energy? It's a small modular nuclear reactor company, an SMR designer plus a fuel manufacturer. Two businesses in one.
The reactor is called the Z100, high-temperature, gas-cooled, generating 80 megawatts of electricity or usable as industrial steam. And the fuel business is TRISOX, a proprietary fuel particle technology that's inherently safe and heat-tolerant, made at their own vertically integrated fabrication plants.
X-Energy actually just went public. IPO priced at $23 a share back on April 24th. As of this week, the stock trades around $18.67, so it's sitting about 19% below where it launched, even after a genuinely strong quarter.
And that's a good place to start. Q2 2026 was the company's first quarter reporting as a public company. Revenue and grant income came in at $54.6 million, up 154% year over year, and way above the $33.6 million analysts expected.
But here's the wrinkle: the loss per share came in at 21 cents, worse than the 10 cents analysts expected. So a big revenue beat, but a bigger than expected loss. Worth sitting with both numbers.
Zooming out, trailing 12-month revenue is about $150 million, up nearly 79%. But trailing losses are close to $449 million. This is a company spending heavily to build real physical infrastructure. That's expected at this stage, but it's a real number.
Now here's what really stood out this quarter. The U.S. Department of Energy notified X-Energy, on the actual day of their earnings call, that they're getting an additional $1 billion in federal funding, bringing potential total government cost share up to $2.115 billion.
That's under something called the Advanced Reactor Demonstration Program, a 50-50 public-private cost share. CEO Clay Sell was pretty direct about why this program exists at all. He tied it straight back to U.S.-China competition in nuclear technology, saying the government chose X-Energy and they chose TerraPower to invest heavily.
X-Energy's already banked $547 million in ARDP cash reimbursements as of the end of June. And the balance sheet overall is in great shape. $1.9 billion in total liquidity, zero debt, roughly double what they had 3 months earlier thanks to IPO proceeds.
Their customer list is genuinely blue-chip too. Dow, for their first commercial project in Texas, Amazon for up to 5 gigawatts of future capacity, Energy Northwest in Washington State, and the UK utility Centrica.
And on the call, management actually teased something bigger, an imminent announcement with a new investor-owned utility customer. They wouldn't give details, saying communities deserve to hear about local projects before investors do.
This quarter also brought real progress on the two things that usually worry people about advanced nuclear fuel supply and materials. X-Energy signed binding, long-term agreements for HALEU fuel, that's high-assay, low-enriched uranium, with Centrus Energy and General Matter.
And a separate deal with SGL Carbon to double their nuclear-grade graphite capacity in France. Management calls this de-risking the supply chain, securing capacity now, before the market's fully built out, with plans to eventually hand those contracts off to customers.
All right, bull case. Point 1, that 154% revenue growth beat analyst expectations by a wide margin, and it's coming from real engineering work under a federally cost-shared program, not speculative hype.
Point 2, the federal government just increased its financial commitment by $1 billion in a single quarter, explicitly framed around national competitiveness with China. That's about as strong a signal of durable government backing as you can get in this sector.
Point 3. The customer list is real and blue chip. Dow, Amazon, Energy Northwest, Centrica, plus another announcement teased as imminent.
Point 4. The balance sheet is a fortress for a company at this stage. $1.9 billion in liquidity, zero debt, conservatively invested in treasuries and high-grade paper.
Point 5. This quarter's HALEU and graphite agreements directly address the two supply constraints most commonly cited as risks to the entire advanced nuclear industry, not just X-Energy specifically.
Point 6. The TRISOX fuel business is a second growth engine beyond just building reactors. It's the first newly NRC-licensed commercial fuel fabrication facility in over 50 years.
Point 7. Management's own framing of the total opportunity is enormous. A $2.3 trillion addressable SMR market by 2050, if global electricity demand grows the way third-party forecasts suggest.
And point 8. The stock's already down about 19% from its IPO price, despite all this operational progress, and analyst price targets imply roughly 100% upside from here. Some of the early post-IPO excitement has already cooled off.
Okay, bear case, and for a company at this stage, there's a lot of it.
Bear point 1. This is a deeply unprofitable, pre-revenue ramp business. $150 million of trailing revenue against nearly $449 million of trailing losses. That gap is real money being spent before real commercial revenue shows up.
Bear point 2. That quarterly loss actually missed estimates, even alongside the huge revenue beat. 21 cents lost per share versus 10 cents expected.
Bear point 3. The whole story depends on execution of first-of-a-kind projects that have literally never been built before. Regulatory approval, construction, and commercial-scale operation of the Z100 are all still unproven.
Bear point 4. X-Energy is heavily dependent on continued federal government support. That's a real tailwind today, but it's also a political and budgetary dependency that could shift under a future administration or a tighter appropriations environment.
Bear point 5. The next fuel capacity expansion needed to scale meaningfully past the first roughly 11 reactors, called TX2, isn't even in construction planning yet. Management said it's still in design and early financing phases, with a timeline sometime in the early 2030s.
Bear point 6. Those big HALEU supply agreements with Centrus and General Matter are confidential on pricing, quantity, and timing. Investors have to take management's characterization on faith without being able to verify the actual contract terms.
Bear point 7. The stock is trading well below its IPO price just months after going public, and recent options activity has shown unusually heavy, directionally bearish put volume. Some traders clearly see near-term downside risk.
And bear point 8, X-Energy's post-IPO corporate structure is genuinely complex, and management itself has flagged that the headline market cap you see on most financial sites may not cleanly reflect the company's actual implied equity value. That's a real complication for retail investors trying to value this stock correctly.
So the tension here is about as sharp as it gets. A company with real federal backing, real blue-chip customers, and a massive long-term addressable market. That is also years away from proving it can actually build and operate its core product at commercial scale, while burning significant cash to get there.
Exactly, milestone tracker. How do we track this one?
Milestone 1, the NRC construction permit for the Dow project in Texas. Safety questions were expected to close by the end of August, with final issuance targeted for the first quarter of 2027.
Milestone 2, completion of vertical construction on the TX1 fuel facility, targeted for the third quarter of this year, followed by interior build-out.
Milestone 3, that imminent, utility customer announcement management teased but wouldn't detail on the call.
Milestone 4, Energy Northwest construction permit submission, targeted for the first half of 2027, the first project under Amazon's 5-gigawatt commitment.
Milestone 5, any further federal funding disclosures beyond the current $2.115 billion potential ARDP total.
Milestone 6, real progress toward financing and construction decisions on the TX2 fuel facility, which is needed to scale meaningfully beyond the current pipeline.
And milestone 7. Any additional supply chain agreements that further de-risk fuel or materials availability, following on from the Centrus, General Matter, and SGL Carbon deals.
That's X-Energy, the smallest position in Peter Thiel's rebuilt portfolio, but maybe the most asymmetric one. A real shot at next-generation nuclear power, backed by serious federal money and blue-chip customers, still years from proving it out.
We'll check back in as the next milestones hit. That's OrderFlow. Follow us wherever you're listening, and we'll see you in the next one.